My name is Ray. Welcome to another episode of Ray's Investment Clue Book. Today, we'll be talking about a basic lesson on financial wealth through an asset accumulation of ownership investment. So, building wealth, what's the key to building wealth, especially here in the West? What's the key to building wealth? Well, the key is really not really income from work, but more of passive income from ownership investment. And so basically investment in assets, owning assets like traditional stocks or on our other end of the spectrum, real estate investments, such as non-home real estate that you rent out to others. So of course, we all know in the U.S., the housing prices after 2008 have been steadily increasing and gaining momentum. And through this, we can have a real estate investment trust. So the first part is wealth investment, wealth accumulation through stocks. Now, of course, stocks, you probably know what a stock is, obviously. And stocks are, of course, in the long term, tend to be growing and going up. Now, here we see an S&P 500 index. We see from around 1990 or so up to the present day, 2018, it's basically increased from around 20, an index of 20 to around 290, which is about a 14-time increase, and so, which is crazy. And so we see that, but there are significant dips in the 1992, 2000, 2007, 2008 the recessions, and so. However, with those dips usually followed by large recoveries. So we see on the long term, stocks are a powerful weapon for wealth accumulation over passive income and just holding on to them over a long period of time. I mean, imagine holding on to the S&P 500 index ETF if it was available from 1990 to present day. It's crazy growth. And of course, other end of the spectrum is real estate. And we see here the median prices usually used for real estate, and the median price of how it is sold. You can see here the prices have steadily increased, just like the value of the S&P 500. And of course, during recessions, they do go down, especially during 2008, 2007, 2008 housing crisis. It dipped by a significant margin, although it has made some recovery ever since then. And in the long run, even with the 2008 dip in the prices considered, still have had a large increase from its prices from 1990. So just like stocks, real estate is also a very consistent investment over a long run. Very powerful for wealth accumulation. So we said wealth accumulation all stems down to passive income from ownership in assets like real estate and stocks, rather than, say, income than the classic middle class fashion of income salaries from work. And we see here, when we look at ownership, that we really see a good picture of why ownership is such a powerful wealth accumulation tool. Now, first of all, let's look at the demographics. So when it comes to percentile of income, the top 10%, 93% of families in the top 10% own stocks, which is pretty telling. It shows just how financially savvy and how important stocks are to very wealthy families. On the other end of the spectrum, in the bottom 20% of income, only 11.4% own stocks directly or indirectly, which also shows that if you don't own stocks, you might not be as well off financially. And we see here overall from the age ranges, usually from 35 to around 65 is when around 54 to 57% of people own stocks, which is the largest amount. We see this is likely because it's an incredible tool to help supplement salaries of these individuals and also prepare for their retirement. And so we see that passive income over time is such a powerful tool for wealth accumulation in retirement, which just explains why, outside of people under 35, around 50% of everyone owns stocks, except for 75 or older when you're already deep into retirement. And so here on our analysis, this is the most clear sign of how important stocks are to gaining a large amount of wealth. We see here the top 1% of all individuals in the wealth and income spectrum. The top 1% own 63% of all business equity. They own 50% of all stocks and mutual funds and 55% of all financial securities. This just shows how important stocks are to having a large asset base and having a large amount of wealth. These are fundamental to the top 1%'s wealth. The next 9%, and if you combine the top 10%, which is top 1%, top 9%, they own basically 94% of all business equity, which means the bottom 90% own a measly 6 amount of all business equity. The bottom 90% only owns 9% of all stocks and mutual funds. And so we just see here how important it is to have ownership. If you want to drive yourself up in the income and the wealth percentiles, you need to have asset ownership. And eventually, who knows, maybe over time you'll be within that top 1% as well. And one last point to mention too is that on the other end spectrum, you know what the top 1% does not have a lot of? They don't have a lot of debt. They only own 5% of all debt. The next 9% only owns 21%, and the bottom 9% owns 74% of all debt in the United States. And so that just goes to show debt. If you want to have the strategy of the top 1%, more asset ownership, less debt. More assets, less liabilities. And on the real estate perspective, we see here that non-home real estate that we rent out to others, only 22% is owned by the bottom 9%. The rest, the 78%, is owned by the top 10%. So on that spectrum, asset ownership also applies to real estate. If you want to be wealthy and if you want to grow wealth, you have to have assets in real estate, not liabilities in real estate. So you have to have a lot of non-home real estate to rent out if you can. This is the strategy of the top 10%. And of course, the principal residencies are mainly 60% are owned by the bottom 9%. That's the other end of the spectrum that often falls into perhaps liabilities. So financial wealth in the end is built through long-term holding of ownership assets. Ownership is important, and it's always important to increase assets while decreasing your liabilities, and that's the main strategy at the end of the day for building wealth. Thank you. See you next time.